Joining us for a conversation is Brett Richards, the CEO of Goldshore Resources. Mr. Richards, welcome to the show, sir.
Hey, Maurice. Thanks for having me.
Well, it's a pleasure to be speaking with you today as Goldshore Resources has some exciting news for shareholders as the company continues on its path to creating the next Tier 1 asset in Ontario, Canada. Mr. Richards, for someone new to the story, please introduce us to Goldshore Resources and the exciting opportunity the company presents to shareholders.
Yeah, absolutely. Goldshore is a company that was formed last year. We've been trading for just over a year now, and on the back of acquiring the Moss Lake project from Wesdome Gold Mines for $52 million in cash and shares last year. And we have put together a strategy over the last kind of 9 months to drill this up to let's call it critical mass. What we acquired in the Moss Lake project was a 4 million ounce historic resource. And our view is that, the extensions of this resource, both laterally along strike and at depth, are significant, and particularly along strike. So, our original strategy was, let's put together a 100,000 meter drill program. Let's get financed and let's get on with it. And that's what we've been doing for the past 8 or 9 months. And, most recent results are starting to, I'll say, support the original thesis we had about Moss Lake being much bigger than first thought.
Well, they certainly do seem to indicate that. Before we deep dive into the press release, there are some important competitive advantages that distinguish Goldshore Resources from its peers and truly make the Moss Lake property a unique value proposition. Mr. Richards, for someone new to the flagship Moss Lake property, please acquaint us with the deposit, beginning with your location and some of your neighbors in the region.
Sure. Now, we're about 120 kilometers northwest of Thunder Bay. In Ontario. So from a jurisdiction standpoint, we're probably in the most mining-friendly jurisdiction in the world. And we are on the Trans-Canada Highway, which is Yonge Street in Toronto. It happens to be the longest street in the world. It goes all the way out to Manitoba. Our concession is adjoint to that. And why is that important? It's important for a number of reasons, particularly about infrastructure. When I look at mining projects at the end of the day, there's the technical side of things, but there's also what I call the doability factor. Is this mine really doable? Can you get this into production easily? And the answer for Moss Lake is yes. Being on the Trans-Canada Highway means we're afforded 10-cent kilowatt-hour power, which goes right by our doorstep. We have a 4-lane highway. So access to our site is as good as it gets. We have, power, water, rail, people, consultants, contractors, government, all within, nothing more than an hour's drive into the city of Thunder Bay, and an international port and an international airport. So we tick all the boxes when it comes to infrastructure. So that is kind of, I'll say, the description of kind of where we are and why I think it's so compelling to be where we are. And there are a lot of people around us as well. The Shibandawong Greenstone Belt, where we're located, has been a bit underexplored over the years because low-grade bulk tonnage style deposits were really not in favor when gold was $1,500. But now gold kind of trading on a floor of $1,800, they seem to be very much more appealing to investors. And certainly after the success of Detour Lake, I think you'll see these types of deposits more and more come into production. Yeah, go ahead, Maurice.
Oh, no, sir. Go, sir.
No, go. Yeah.
Well, you referenced that you had a historical resource. You also completed a robust PEA back in 2020. Can you share some of those highlights with us?
So historically, the area has been, let's call it, cobbled together as a big land package. There are 3 distinct areas within our domain. The Moss Lake area being kind of the flagship. It is what carries 3.5 million ounces of that historical resource. Up in the northeast, up near the highway, we have Coldstream and North Coldstream and Iris Lake. Again, it's all kind of compartmentalized land packages that were cobbled together by Wesdome. And there's a 500,000 ounce historical resource on Coldstream, and a former actual operating mine at North Coldstream that ran for about 30 years in the about 40 or 50 years ago. So we have a very interesting kind of I'll say land package, and the work that has been done on this culminated in 2013, where a PEA was done on the property by Moss Lake Gold Mines. Again, it was updated in 2020 by Wesdome prior to kind of launching a sale process. And the economics of that, and let's face it, PEAs are a snapshot in time, and the time in 2013 and the time in 2020 and the time today are all very, very different. Knowing that we are in a hyperinflationary environment today, what CapEx might have been $500 million back in 2020 might be $600 million or $650 million today. And we have to keep that in mind as we go through. But I think back in 2013 and back in 2020, this project, at these gold levels, at $1,800 to $2,200 gold, it trades between a 27% and a 40% IRR. So after tax internal rate of return, very, very compelling. We can look at the NPVs of these projects, but again, they're snapshots in time. What that tells me is that this is a robust project that when tested, even with inflation, even with different input assumptions relative to the economic circumstances at the time, this is going to be a project, and it's going to be a robust project.
Now, Goldshore Resources currently is embarked on a 100,000 meter drill program. Are you twinning the holes and conducting step-out drilling on this?
Doing both. So we are doing some verification drilling of the existing historical resource. We are stepping out laterally. We are stepping out along strike, and we have identified a parallel zone to the Moss Lake deposit, which is very exciting, and some high grade structural areas within the deposit, which we'll look to improve the overall grade and volume as we get further down the road and get closer to a resource estimate.
Speaking of your drill program, some of the initial assay results have just been released. What do they seem to indicate thus far?
Well, I think we've always been trying to test our own thesis that this is bigger and much more robust as a deposit than the historical resource illustrates, and we've done that through a geophysical survey, and you can see that on our website, the 3D model of it, where you can see the potential for future mineralization up along strike that goes 7 to 12 kilometers further than where Moss Lake is now. And but I think the results that we started to put out from the very beginning show between 1.1, 1.2, 1.3 grams over long intervals, long intercepts of 50, 60, 70, 100 meters, 120 meters in some cases. So some really, really good, I'll say some really good intercepts. But I think what the surprise has been is where we have gone kind of not twinning holes, but stepping out a little bit and stepping into an area that might be classified as inferred. We've hit some high grade structures, and I think that's simply because of the geophysical work we've done, the structural work we've done with a structural geologist by the name of Brett Davis, who's on site currently, and Pete Flindell, who is our VP of exploration. He and the team have really kind of figured this out. So the targeting of some of these higher grade holes has been something that we wanted to do, because ultimately when we kind of go to I'll say interpret all of this data, I don't think the market is going to want another kind of 1.5 or $2 billion project that does 60,000 tons a day and produces 600,000 ounces of gold. That's just not, viable in this current economic environment. You're not going to be able to raise that kind of money. You're not going to be able to get traction on that type of project. So, I think we have to start pivoting and looking at alternatives. And what are those? Is there a higher grade starter pit alternative here within the deposit? And I think that's what we're going to try and kind of focus on over the next little while. So that will be more infill and more delineation drilling than anything. But we are still doing some step out as well.
All right. Well, let's get to the press release. Goldshore Resources just received some welcoming news this week from the assay labs, which identified significant downhole gold intercepts. What can you share with us, sir?
Yeah, so the release this week was, again, more of the same. You can go into our press on goldshoreresources.com and look at all the results that we have put out so far. This most recent one, 78 meters at 1.17 grams from about 170 meters depth. This is, a great hole. It's all going to get contained within an open pit mine. It's going to pull a lot of tonnage in. And I think, there were some high grade areas within that, including 22 meters at 2.3 grams and 5.6 meters at 5.69 grams in and around the 200 to 220 meter range. So this is really encouraging. And there are some other intercepts on some other holes that we announced, but it's all more of the same. There's anywhere from 20 to 100 meters at over a gram. And that's what the target, that's what's going to make this deposit at the end of the day, is trying to maximize the grade. And even a little bit of grade, 0.1 grams here is going to add 10% to our resource. If you have 1 gram or 1.1 gram, it's quite meaningful at the end of the day. So we'll figure all this out once we get all the data. We'll figure this out once we get towards a mineral resource update at the end of the year. But I think right now, and I can talk a lot about the current market dynamics right now, but sadly, putting good results out into the market has not really, moved our share price. It's actually, we have been impacted like all the other junior miners, and we've been trading downwards.
I would have to agree with you on that, sir, but I know that the shareholders are delighted from this latest press release. Looking forward, what can you share with us regarding optionality and economic open pit shells as you model your resource?
Yeah, I think we're going to see a lot of results come out over the next 6 months of more of the same. Illustrating our thesis that this is going to be a real project, and also I think better delineation on defining this higher grade starting project. But we can't lose sight that I think this is a tier 1 asset. This is going to be 10 million ounces by the time the drilling has commenced. By the time the drilling has wrapped up, whether that's a year or 2 or 3 from now. This is such a large area. There's probably going to be another 100,000 meters drilled behind this 100,000 meters as this gets towards feasibility study. And like I said, we've got a footprint here that is definitely a tier 1 asset at the end of the day. But I think we need to start focusing on what the market is going to respond to. And the market is going to respond to, is this a project that has a smaller CapEx option, smaller starter pit that's positive cash flow, as soon as possible? Those types of questions, need to be addressed and need to be presented to the market. So we're going to be looking at a number of permutations at the end of the day when we do a PEA next year.
Well, let's get into some numbers. Mr. Richards, please provide the capital structure for Goldshore Resources.
Sure. We have about 143 million shares outstanding today, and only 5 million warrants outstanding. And we've got about $13 million in the bank as of June. So, we're well positioned here. We can ride this out. As I've said before, we got caught in a bit of the whole market dynamics. We wanted to play a bit of catch up and get ahead of the curve on drilling. So we ramped up our drilling just before the whole market started crashing. So, we took our foot off the pedal and we put the brakes on a little bit. We did scale up to 7 rigs, but we pulled back now to a couple of rigs. I want to ride this out. Preservation of cash and preservation of this company is first and foremost. The capital markets are so volatile and so unpredictable right now. I'm very comfortable just burning a couple of $1 million a month and just watching this, or less than a couple of $1 million a month, and just watching how this unfolds to the fall, because we don't want to be in a situation where we where we have to go to the market and the market is not there for us.
Speaking of being comfortable, I just want to share with everyone that I am a proud shareholder, and I'm looking to add to my position under these circumstances. The value proposition is extremely compelling, and I'm not discouraged by the price. I understand how markets work. Now, since we're covering numbers, how does Goldshore Resources compare with some of your peers?
Well, we've really never been able to kind of figure this one out, but we're trading today somewhere kind of in the order of magnitude of around $10 an ounce, and we're trading. It's crazy, but that is kind of where we are today. Our peers have also been impacted, but they also had a higher starting point. We've got a trading comparable sheet in our presentation that has us at the bottom of our peer group, and this is a peer group put together by a bank. And at trading at $10 today, and our peers trading anywhere from 15, 20, 25, all the way up to $100 an ounce for Marathon. So we on a pure comparison basis, we are the cheapest out there, cheapest opportunity out there. And when you start looking at what it costs to actually bring ounces onto a resource statement, to put ounces into the inferred category costs about $30 an ounce. If you have a million ounce inferred resource, it's probably cost you $30 million to get there, then drilling and other activities. So we're trading at a third of that, a third of what it actually costs to do it. So I think from an investment opportunity standpoint, there's one way here, and it's up.
I agree with you, sir. Well, in closing, sir, what would you like to say to shareholders?
Maurice, thanks for having me on today. I think the really compelling investment case here is how we have performed against the general market and where we are today. And I'll say the leverage that we have on the way back up. This is not going to go on forever. We may still feel some pain in the capital markets going forward, but we are going to recover, and commodities and gold equities are going to accelerate, and probably much faster than the market when it does turn around and when it does come back. We are actually leveraged to that even greater than the normal gold equity market because of our size and our scale and our potential to bring this up to a tier 1 status. So there are a number of compounding, compelling investment reasons why Goldshore, and I am also a major shareholder of this company, and I have never continued to lose sight of the fact that this is a real project and this is going to get into production one day. So thanks for having me on the show, and look forward to doing another one and update all the investors and all the shareholders a little later on this year.
Mr. Richards, it's been a pleasure speaking with you today. Wishing you and Goldshore Resources the absolute best, sir.
Thanks, Maurice.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.